Hello, and welcome to Financial Accounting. Our topic today is payroll. In this video, we will go over payroll-related terminology and discuss payroll-related expenses and liabilities and how employers calculate and record them. The term payroll refers to amount paid to employees for services they provide during a pay period. Payroll can include either salaries, wages, or both. Salary refers to payment for managerial, administrative, or similar services. Wages refer to payment for manual labor, both skilled and unskilled. The total earnings of an employee for a payroll period, including bonuses and overtime pay, is called gross pay. This is the amount recorded in the wages and salary expense account for the pay period. Now let's look at an example. In this example, gross pay is $13,800. From gross pay, several deductions are subtracted to arrive at an employee's net pay. Net pay is the amount the employer must pay to the employee. In this example, it is $10,830. The deductions include FICA taxes payable and employee federal and state income taxes. There might be other taxes due depending on the worksite location. The amounts of federal and state income taxes are determined based on the employee's tax withholding forms. The W-4 form is the IRS document an employer completes and gives to employers to determine how much should be withheld from the paycheck for federal income taxes and sent to the IRS. Correctly completing the W-4 will help avoid overpaying taxes throughout the year or owing a large balance at tax time. States have similar forms. The form numbers and names vary by state. Before we move on, let's take a closer look at FICA. FICA stands for Federal Insurance Contribution Act. It was introduced in the 1930s. FICA requires employers and employees to contribute to Medicare and Social Security programs. These taxes are deducted from employee paychecks and matched by employers. Most employers are subject to federal and state payroll taxes. Such taxes are operating expenses of the business. For example, employers are required to match the employees' contributions to FICA. In addition, most companies are liable for federal and state unemployment taxes. It is important to remember that FICA and federal and state income taxes withheld from the employee's earnings are not employers' expenses. Instead, these amounts are withheld on behalf of the employees and must be remitted periodically to the state and federal agencies. Now, let's get back to our example and review how payroll is recorded in the employer's books. The payroll taxes due from employers and employees become liabilities when the related payroll is paid to the employees. Employers are responsible for collecting, paying, and reporting certain federal and state employment taxes for all employees. However, the liabilities may not be paid to the appropriate taxing authorities until later. The gross pay of $13,800 is recorded in the wages and salaries expense account and is reported on the income statement. Remember that expenses are a part of the retained earnings, which is a part of the stockholder's equity. The employees' FICA taxes, as well as income taxes withheld from the paychecks, are recorded as liabilities and reported on the balance sheet in the liabilities section until paid. Assume that federal unemployment tax is $145 and state unemployment tax is $25. The employer's FICA tax amount is the same as that of the employees, $1,035. All these payroll-related taxes are operating expenses and are reported on the income statement. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button, and ring the notification bell so you are notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.